Good morning, Steve Freed in Chicago with the morning grain comments. I think everybody is jumping on the preparation bandwagon because of the spread of the coronavirus here in the United States. It's now in 16 states. So everybody has to take precautions, washing their hands, and in some cases people are saying stay away from the public. We continue to see conferences being canceled across the country as a safety measure. I think everybody's smart. It won't spread, and I think there's a lot of work right now being done in Washington to try to come up with a vaccine and also taking measures to stop the spread of the virus. The mortality rate in this particular influenza is higher than as a percent than the regular influenza, so that's kind of one of the concerns. Interesting trade overnight. Yesterday the stock market was down after the Fed lowered rates, thinking maybe the Fed has done all they could to help the economy at this time, and that they may not have any more bullish news down the road, and that maybe the virus spread is going to be worse than what people thought. Overnight, the stock market rallied, and I think that's because of the show by one Democratic candidate, Joe Biden, and the Super Tuesday. He did better than people thought. Which means that a moderate in the Democrat might be gaining a little momentum versus some of the issues that Bernie Sanders is talking about. It didn't really filter into the grain markets because politics is not really affecting grain demand at this time. The bean market's up a little bit because of Argentina raising an export tax and a firmer palm oil market. Palm oil is trying to bounce back from its recent lows on hopes that China and India will increase some of their demand for palm oil, and if they do, supplies are tight already. The corn market's doing basically nothing, still trying to struggle between concerns about lack of demand and also the concerns about bigger supply versus the fact that farmers aren't selling. Cash bases are very strong for this time of year, and we're seeing spreads narrow to try to buy grain to put into the pipeline. As far as the wheat market is concerned, it's down a little bit, dollars up. Also talk about the fact that globally we're going to see record wheat crops around the world. We're seeing improved conditions in India, improved conditions in Australia, better conditions in Europe, although some places are reporting too much rain, and then improved conditions in the Southern Plains. And again, Southern Plains is going into this crop year with some of the better moisture conditions that they've seen in a long time. It is March. We'll start seeing warmer temps across the Midwest, and farmers, especially in the upper Midwest, will start looking at getting into the fields, while in the South, a wet pattern could slow plantings down there. So again, a lot of problems trying to get beans over the 920 area, 880 is support. Corn is going to have a lot of problems getting over this 385 area, but more importantly, $4, 360 seems to be, 360, 370 seems to be support. And the wheat market, it's going to be really difficult for the wheat market to rally much from here. Support's down at the $5 or 510 area. So we might be establishing more of a trading range than breaking out of the range anytime soon. South America yesterday saw two private groups raising their estimates of the Brazil soybean and corn crop and keeping the Argentina numbers unchanged despite the dryness. And the weather forecast for Argentina suggests next week Central Argentina could finally see some good rains. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.